You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to this week's edition of the Option Block. Filling in for Mark Longo this week, it is Mike Tusaw, and I'm always humbled to be in the hot seat, but always try to do my best to fill the very large shoes of Mark Longo. To start off the show, we'd like to introduce our cast of characters, starting off with the Viceroy himself, coming at us from Options Express. Alex, how are you today, Alex?
Hey, Mike, I'm good. How are you?
Doing well, doing well. It's always exciting when we're in a little bit of a break from the cold weather, so to speak, but then we do have a cold day, but then we're supposed to get warm again tomorrow. So
yeah, it's over.
We'll see. We'll see.
It's not going to snow anymore. I'm taking the convertible out of storage.
All right. And also joining us today, we have the pleasure, Mr. Mark Sebastian. Seabass, how are you?
Hey, everybody. How's everybody doing? It is good to be alive.
Someone must have made a good trade today.
No, I passed my Series 65 today.
Wow, what'd you get?
73%.
I'll tell you what, I will give you and Andrew credit. You guys know exactly when to stop studying.
Yeah, no, we studied the perfect amount. We really did. So, no, it worked out really well. The part that surprised me was how much there was, I was expecting a lot more regulation on it, and there ended up being a lot of, stuff on current ratio and working capital ratios and things like that kind of threw me off. But it was I think, is it 72 or 73 is passing? I don't remember.
72.
72 is passing. So I had a full 2 questions that I could have missed more and still pass. So, I almost got a 74. So go me.
There you go. Well, that's always exciting when you can pass a test to prove that you are now an industry expert because you passed that 65.
Yeah, well, you know what they call the guy who graduates last in his medical school, right?
Doctor.
Right. And that's what they call me, the guy who graduates last in his FINRA Proctor delivery system, Series 65. They call me a uniformed investment advisor.
There you go. All right. Well, on that note, Mr. Investment Advisor, tell us about this VIX. It's up, it's down. Tell us about this crazy ride with which we've been taking from Friday until today.
Well, they ran it up into the Russian stuff. They realized that there's not going to be a war, so they brought it back down, and now I think it's elevated until we kind of figure out what the real net result is of Russia. And we also have Federal Open Market Committee on Wednesday, and I think people are going to hold this up until they see kind of what the statement is and what they say. We're assuming they're going to do 10 billion in taper, but what is going to be the additional junk that goes along with that? That's kind of the question that everyone has.
So you think like the drop from the mid 17s down to the 15s, that's because there's no war, but you're thinking that if all of a sudden everything is as expected, so to speak, with the Fed statement, we could go down even lower?
Yeah. Oh, yeah. I mean, I think that, well, look where we were 2 weeks ago. We were about 14. I think that absolutely should be in the cards. And that, if we don't really see anything, then that's where we'll end up. Now, if a deal actually gets signed, I mean, who knows what we could do? We could be, all over the place. It's real. I don't know where we could end up. I mean, it could really be, we could end up at 13. So that's my thoughts.
Got it. Now, right now, are you doing more along the lines of, are you doing butterflies? Are you doing calendars? What are some things with which you're doing with some of your trading these days?
I like, the trades I like a lot right now are, I think front spreads look pretty good. Kind of a wider condor-y type of stuff I like. And, things like that. Those are really what I think makes the most sense to me. Flies, I like, except for the fact that, I think there's a chance that, something gets, who knows? I just think we could really move. And so that's less conducive to a fly than it is anything else. Some of the other trades.
Sounds good. And Alex, what's lighting up the tape over at OX today?
Surprisingly, it was a quiet day today. Market was up right out of the box, and when I queried the desk, I was kind of surprised by what they came back with. They said that it was a pretty ordinary day, and that most of the activity they had was in the what we kind of call the traditional option names, and it's the Facebooks, the Twitters, the Googles, the Pricelines, Netflix, Apple. One name is a new name to the list. They said they were active in Nokia today, which is kind of a name we haven't talked about in a long time. And a little bit of trade lift in Lulu, which has kind of fallen off the screens since it's sold off. I think if we see that get back up over 50, 50 is kind of the new 70 in Lulu, I think we may see some activity there because that's sitting in a lot of portfolios. But not a day with a lot of, where the desk was backed up or, spurts of activity. We were up right out of the box, and it was a good day overall.
Yeah, most definitely. We were, I think I was just looking at the numbers from start to finish. The actual, we're not that far. I was just looking at the Russell real quick, and we're not that far off where we opened at this morning, just because of the overnight gap up. Now, Mr. Longo, our beloved host, is actually at the FIA show in Boca. I think he just wanted to make sure that he sent some cold weather our way to Chicago just because he could. But he came up with an interesting question, a couple of them actually, from one of the panels with which he was at. A futures trader asked the CEOs of the futures exchanges, who's going to be on this platform in 5 years? And the question kind of had to do with the idea of, will there be more or fewer exchanges? Now, with the ICE, with the CME, with all the exchanges that exist these days, what are some of your guys' thoughts on the exchanges and they exist in the futures world? Will there be more? Will there be less? Will we get some things more centralized? What do you guys think?
Well, Jeff Sprecher, who now runs the ICE and the New York, has started a campaign for the elimination of maker-taker. And part of the proliferation in exchanges has been like my old shop at the ISE now has ISE and Gemini. And one of the reasons Gemini exists was so you could create maker-taker. The evolution of the business in the last 14 years, the growth of exchanges really began in 2000. If we eliminate some of these rebate models and some of these maker-taker models, then I think there will be consolidation. And it wouldn't surprise me if you only saw 3 or 4 large exchange groups. So I think that's clearly a possibility. CME is going into Europe now, so this is going to get interesting to see if they become a viable competition to Eurex. And if they do, I suspect you'll see some more consolidation in Europe. You're going to see some consolidation here if maker-taker diminishes or goes away. I mean, every time I get the question, how many options exchanges are there, I have to pause for a minute and do a new count. And it's just senseless. Some of these exchanges do 1 or 2% volume. They make it difficult for the people who are in charge of routing the order flow. They create expectations of, an NBBO. So I think there'll be consolidation. Mike, what do you think?
Well, just going through this, it's funny you mentioned that of all the. I can't keep track of all the new options exchanges that are in existence these days. I remember back when I first broke into the business about 10, 15 years ago, you just had a few of them. You had, and it seemed to me like the only ones with whom anyone ever really paid any serious attention to was the CBOE, the ISE. As well as and occasionally the Philadelphia Exchange. And those were the major exchanges. But now it's definitely been a changing game. I think the other thing that, and I know we've talked about this on the show a ton, is the open outcry that still does exist, whether it's through the big S&P contract on the future side of it, the SPX on the CBOE, whatever the case may be. It amazes me how that still stays around, even with all of the, as a wise man once put it, the exchange politics that exists. So I don't see how, if you have all these entities doing the same thing, it just seems like in general to me, how can that continue to exist?
Yeah, would you build a trading floor today? No. So what's the future of trading floors? They're either going to be dominated by monopoly products or products that benefit from the price discovery of a trading floor. And I'm not sure you could make that case anymore. When I worked at the CBOE, my office was up on the 5th floor. And although I wasn't directly over the OEX pit, I could tell you when the market moved by the rumble from the OEX pit. Now, again, I'm dating myself. This is back in the late 80s. It's real expensive to run a trading floor today. And I kind of think you were quoting me when you said exchange politics, but that's the issue here, where you still have monopoly products, where you still have barriers to entry, call them country clubs. You can support that, but that means your customers are paying for it. And I don't know how much longer that can continue. I mean, one of the things I always harp on is, when is the big SPX futures option contract going to go electronic? And it makes no sense in 2014 that product can't get up onto CME's electronic network. And it's simply because the exchange politics preclude it.
Yeah, that's something that never ceases to amaze me. And I'll end on this. I remember a couple of years back when Kavanaugh and I were first starting, we were just looking for some office space. And so we would do exchange tours with clients at the CBOE. And this is, like I said, probably about 4 or 5 years ago. And we were down there and we saw some other they had space for rent on the floor of the CBOE. And we were thinking, maybe we should look into that. How cool would that sound if we told our clients, yeah, our office is on the floor of the CBOE. And so we actually eventually just decided not to even look into it, because we didn't think that would be that much of a big deal to people, because of the fact that all the trading's not on the floor these days anymore. So that's what we didn't even look in to see how much it cost or anything.
Well, I think something needs to be said about, this whole maker-taker thing. It's not just the fact that it fragments things, but it invites potential conflicts of interest in terms of how paper gets routed and how flow gets routed. And I'll tell you, as somebody that at Swan, where we will do some big orders, these little tiny exchanges completely screw up our ability to price things out and to get a reasonable price. And some of the different firms and the way they use DMA is just absolutely ridiculous. There's no way to actually execute an order DMA with all these little exchanges screwing up the NBBO. It's really bad. And so I invite the end to maker-taker exchanges. In fact, I think maker-taker needs to go not just in option exchanges. It needs to be out of the stock market. It needs to be out of basically anything. Personally, I think payment in general is a joke. But at least the traditional payment for order flow, the executing firm has, the customer's best interest. But I can promise you, if we do a study since maker-taker became more and more popular, you will see a direct correlation between underlying slippage and executing prices for small retail orders.
Now, to kind of add to that, Mark, just to take a step back, when you had mentioned when you're trying to do a big order for your fund, let's say that you're trying to do 1,000 lot on SPY or a 2,000 lot, whatever the case may be, what's screwing up the NBBO with the small exchanges quoting a 10 by 10 order, and you're not able to actually get a legitimate order. Now, obviously, I'm oversimplifying it. You're doing this with multi-legs and very large contracts, but would that kind of sum up where the smaller exchange would kind of screw up what you're trying to do?
Oh, yeah, absolutely. Absolutely. The other piece, one of the other issues is that payment in general, my order gets routed to some market maker that wants to do it, that's paying for the order flow, but wants to see a 10 lot, then it sits there and they just, everybody tees up on your order. DMA used to be awesome. Now it's impossible. I don't know how, obviously I don't think Alex is much to, I don't know if you want to comment on whether you've seen anything like that. You work for one of the brokerage houses, but, I think there are, some serious offenders, and my understanding is OX is not currently one of them.
Fragmenting liquidity is a nightmare. Just starting an exchange to game maker-taker is not really increasing liquidity. It's not increasing liquidity. It's not increasing transparency. And you devote a lot of money and a lot of technology to order routing today, and it's not getting any cheaper. And the challenge is you created this expectation with the individual investor, with the retail customer, that you're going to be able to trade cheap and you're going to be able to bang 10 out at the NBBO. And you are going to be able to bang 10 out at the NBBO, but trading cheap may have a limited life. It's, we talked about some of this on one of the last shows where we talked about some of the big institutional investors actually slowing the flow down and trying to find greater liquidity. This is why markets still trade upstairs, why a lot of stuff still trades off the floor, and that's not good for anybody because it takes the transparency and liquidity away. It's going to evolve. It evolved in these last 14 years, and it's probably going to evolve in the next 7 or 8 years, and it's going to change.
All right. Well, on that note, we are going to change into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And welcome to the Odd Block. This is the section of our show where we talk about things that just seem a little bit odd. And today we have Mark Sebastian leading us through it with the Odd Block, which is nothing odd about it. So, Mark,
let's start with
talk about UQM.
Yeah, UQM. This is we're going to call this a Longo special. Stock's trading 277. Today a paper bought 2,000 of the UQM April 2.5 calls for up to 60 cents. Open interest was 465 contracts, so it was opening. It went through multiple blocks, buyers lifting offers. I just love it when somebody pays for 30 days of exposure, a full 20% of the stock price. So nice IV, nice trade. Not one that I would, it's electric motors, generators. So somebody's thinking it's a plug power play is my guess. So there's that sucker.
Interesting. So you think that you're better off just buying the stock since it's under $5? I've heard that somewhere before.
Well, yeah. Well, when it's $2, I can pay 60 cents for a call that expires in 30 days, or I can buy the stock for $2.77. You tell me.
I hear ya. Yeah, just to give you an idea of that, the strike on that one? Oh, the 2.5 calls. Yeah, sorry.
So a little in the money. So there is some of that at least.
Yeah, so with that, that's some pretty expensive juice. So, if it makes money, who are we to judge? How about SIMG?
SIMG. So this is Silicon Image. It's another lovely one at price is $6.93. It's at the top. Paper bought 1,300 of the March 7 calls, paying 15 cents. Well, at least that one is logical. The open interest 1,200. So this is opening again. Traded in large blocks, over 3,000 traded on the day. Steady buyers, volumes over 3,000 calls traded a day. So lots of buyers, lots of call buyers. The applied vol is about 46%, so much more logical. It's they do connectivity, and it's a nice little cheap bet. So at least you've got that. That's less atrocious than some of these other trades.
You're seeing most of the volume on this is fairly small in size. So would you believe this could be a newsletter play of some sort?
Yeah, I don't know. It could be a newsletter, but it's definitely a some sort of a bet, if you will.
Got it. Yeah, and if it's 25 cents right now, do a trade like that every day, 3,000 times, you're not going to be too bad off.
No, you will not.
It's just that easy.
Easy money.
There you go. Moving on. Tell me about Montage Technology Group.
Montage Technology Group. You don't know Montage? You don't know anything. All right. Trading about $21.98. It's, again, near the top of its range. Paper was buying the 20 calls for the 20. It had to be the 20 puts for a quarter with the stock $21.98. Went up in a couple of blocks, paying 10 cents all the way up to 35 cents. IV went through the roof. So things are really, really pricey. The 22.5 calls are trading. This looks like another one of those kind of low volume, high flying bets. So that's it's one that maybe we don't know that much about, but is always an interesting one.
Yeah, those are fun to watch. You always like to see something like maybe in another couple of days, Montage could be trading at $47 or $7, one of the two. You never know. All right, let's sell some calls. How about DSW? I love their shoes.
Here's one that I know. So apparently, somebody did not see my wife walking into a shoe store today and said, well, I guess that one's topped out. So DSW, which stands for Designer Shoe Warehouse, not Discount Shoe Warehouse, are trading $40.33. Today, paper sold the April 42.5 calls. My guess is that is a kind of a synthetic buy right where the holder is long the calls, selling long the underlying, selling the calls for income. $3 against a $40 stock. Talking, 7.5% over a month. I'll take it if it rallies. So there are definitely worse positions to be in than that trade. So, I don't hate that.
No, I don't either. And that's one where once the stock goes up a little bit, one thing that we often do is sell some calls against it. And it could even be a potential wheel trade. You never know.
It absolutely could be a wheel trade. Why not?
And with that in mind, let's wheel right on into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to our Xpress Block. This is the section of the show where we don our fedoras and we listen to what the wise words of the Viceroy are for the day. Alex, take it away.
So, as I said at the open of the show, it was somewhat of a quiet day, even though the markets were in rally mode right out of the box. The desk said that the only names they really had unusual volume in were the traditional option names, and that's always indicative of the triple-digit stuff, the Googles, the Apples, those kind of names. And we do have a whole sort of cadre of users at Options Express that like to play periodically in the little stuff on the triple-digit names. So anytime they see a little bit of a pop, they start to buy stuff 3, 4, 5 strikes out of the money in expectation that the momentum is going to carry through. So the desk saw some of that today. Trading in energy and interest rates has slowed a bit. And one of the observations is the decline in volatility in the sovereigns. The U.S. 10-year and the Bund throughout the last couple weeks was trading realized vol, a daily realized vol of 40 or 50%, which is astronomical, especially for the 10-year and the German 10-year, the Bund. That number has come in a lot, and part of the reason the number was up so high was obviously the events going on in Crimea, and when Angela Merkel was talking tough to Putin, the German 10-year was moving 3-4% a day. That's kind of unheard of in that market, kind of unusual, but the volatility in our 10-year has come in a lot. It's still trading about a 20 annualized on a daily basis, which is still probably 2.5 times normal, but it's definitely come in a bit. So the trading we had earlier in the year in both energy and the interest rates has come in a little bit. That makes sense because the vol in both of them has drained a little bit. But there's still a lot of folks, looking towards Europe with an expectation that there's more volatility events coming. But overall, it was a good day. Market was up, but it was a quiet day.
Sounds good. Sounds good. Thank you for the Xpress Block, Alex. Let's go right into Around the Block.
Around the Block.
And we are concluding our show today with Around the Block. And for the most part, I have a hunch of what everyone's going to be looking at over the course of the next couple days. We're recording this show on St. Patrick's Day. So happy St. Patrick's Day to all of our Irish listeners out there. And even if you're not Irish, happy St. Patrick's Day nonetheless. Alex, what are you guys watching over at OX these next couple days?
Well, as I said, we're watching the 10 years as kind of a vol measure. We're watching the VIX. Clearly, we're watching world news. That seems to take a lot more precedent than anything that's going on in the market. Wednesday's FOMC meeting, Yellen's first FOMC meeting. I think we're all agreed that we'll probably see another 10 billion cut, probably down to the 55 billion area, maybe more than that. But we're in a modest interest rate environment. Seeing the 10-year at 269, I don't think any of us would have seen that a year ago or even 3 or 4 months ago. So looking at world events and macroeconomic events.
Very good. Very good. Sebastian, what are you guys looking at?
You've got Russia, you've got FOMC. I'm really interested in what's going to happen here, because the VIX and volatility in general has really been ticking up. So I'm going to be really interested to see where things land and how things end up in the near term. So that's kind of my thoughts.
Yeah, I'm kind of in the same boat. All right, Alex, what can we look forward to at Options Express? What events do we have coming up?
A couple live events, and obviously now that the weather's better, we're back in live event season. Our live events are conducted by Jimmy Ruzan, former Group 1 market maker. And
great guy.
And a great guy, and a good dancer, and he enjoys barbecue. I think that was his trading acronym on the floor of the SIMO.
In fact, was his trading acronym. He got so cool that people stopped calling him barbecue and they just called him Q.
Yeah,
he was that cool.
He cut his beard off last week. He had this hippest 70s beatnik beard, and I always give him grief over it, but he cut his beard. But anyway, Jimmy's next event is Saturday, March 29th in Baton Rouge, Louisiana. It's a Saturday. It's basically a 3/4 of a day event. But all our live events now are simulcast on the site. All the events are free. The benefit of the simulcast is not only can you participate in the video, but you can ask questions and interact with both the crowd and Jimmy. Next live event, Schaumburg, our Chicago event, April 26th. At the Marriott out by Schaumburg. I may join Jimmy for that one and do 10 or 15 minutes of hub. That's Saturday, April 26th at the Schaumburg Marriott. And again, simulcast on the site. If you don't want to come out to the Marriott, understand if you want to stay home on a Saturday, have a little cocoa and pet the dog. But I'm going to try to make that one. Just come to the site, optionsexpress.com, register for the events. If you're going to participate in the simulcast, come to the site, register. You'll get a link to participate to the simulcast. A couple webinars coming up. Wednesday, March 19th this week, David Hightower writes the well-known Hightower letter, is going to be talking about trends in the futures market. David has what I will delicately call a very, very large following in the futures community. And then Thursday, March 20th, Nina, our director of education, is going to talk about new features on the site and go through the walk limit product. Walk limits at this point still an Options Express exclusive. Does what a savvy trader would do. It lets you work an order, lets you establish limit prices, adjust the limit, time parameters. Very, very cool product. I demo it every time I do the Iron Condor demo in Hub. But there's always a full schedule of webinars. Just wanted to showcase those two coming up this week.
Sounds good. Sounds good. And folks, I can just tell you from experience, if you ever get a chance to go to an Options Express event, it's always a good time. Mr. Sebastian, what do we have coming up in the pit?
They've got a new, we've got our new gold course launching. It's going to be pretty neat. So expect an official announcement probably this week. And then we should have the chat room open in the next couple of weeks. And then at Swan Wealth Advisors, we are working hard on Swan Re, which is a, I can't talk too much about. It's a Reg D offering, but It is, we're having a lot of fun. Let's just put it that way.
That's good. That's good. All right. And then at RCM coming up this week, we're going to have a webinar on potentially making money in a sideways market. For more information on that, go to www.rcmwealthadvisors.com/webinar. On that note, I would like to thank the cast of characters, Mark Sebastian and Alex Jacobson, for joining me today. And we will see you next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.